The stock market has had its worst start to a year in recent history, and things could get worse as recession fears loom. Since World War II there have been 13 recessions, defined as 2 consecutive quarters of GDP decline, and there have been 3 in the 21st century, 2001, 2008 and 2020, according to the National Bureau of Economic Research. Some experts say another one could be on the way. It's no wonder, then, that investors are worried about the Federal Reserve's ability to achieve a soft landing, bringing down inflation without hurting economic growth, as it tightens monetary policy. The S&P 500 briefly plunged into a bear market last month as investors were whipsawed between inflation concerns and rising rates. Historically, when inflation is high and the Federal Reserve is working hard to quell it, recessions happen more often than not, as rate hiking campaigns often precede. He puts the odds of a recession at 50% within the next 2 years. So, how do stocks perform when the economy is faced with a recession? The S&P 500 surprisingly rose an average of 1% during all recession periods since 1945. That's because markets usually top out before the start of recessions and bottom out before their conclusion. In other words, the worst is over for stocks before it's over for the rest of the economy. In almost every case, the S&P 500 has bottomed out roughly 4 months before the end of a recession. The index typically hits a high 7 months before the start of a recession. During the last 4 recessions since 1990, the S&P 500 declined an average of 8%, according to data from CFRA Research. In over half of the 13 years with recessions since World War II, however, the S&P 500 has actually posted positive returns. Prices lead fundamentals, therefore the stock market falling into a decline is traditionally an indication that most investors believe we are headed for a recession, explains. When we do finally fall into a recession, that's usually a good time to get back into the market. Where exactly should you invest your money in the midst of a recession? Consumer and healthcare stocks have tended to outperform, the only 2 positive sectors during recessions, on average, while airlines, automobile manufacturers, hotels and casino stocks have all struggled. During the last recession in February 2020 to April 2020, which was sparked by pandemic lockdowns, stocks fell 1.4%, but the S&P 500 closed out the year over 16% higher.